The stock market has recovered quite well over the past couple of weeks, but the fear of a recession still looms over the United States, and I truthfully think that we could be in the early stages of a long-term equity bear market. What's going on, guys? It's CryptoDave here with the top tier, and in this video I want to break down my thoughts on the stock market right now, whether or not I think it is a good idea to take that risk on exposure, or if this is simply a relief rally, a dead cat bounce before we go any lower. And guys, if you are invested in United States stocks, if you live in the United States, or if you overall just enjoy trading stocks, this is a video you are not going to want to miss, because I truly think that this is a significant moment in time for large indices such as the S&P 500 or the NASDAQ 100, these traditional investment vehicles that have paved the way for quite some time. Guys, if you like these deep dives, these market updates, subscribe to the channel, tick the little bell. You will get notified every single time that we post. Without any further ado though, guys, let's go ahead and jump into the discussion. In this video, I want to discuss just some pure technical factors here on the S&P 500, and most importantly here with our longer term daily EMAs. Moving averages are an excellent tool as long as you use them properly, and using them on higher time frames gives us a very good idea as to the overall long-term direction of price action and who is in control of the market at any given point in time. And while we can see the stock market has recovered quite nicely over the past few weeks, it's very important to understand where we are in terms of the broad overall trend. You guys will notice that the 21, the 50, the 100, and the 200 daily EMAs are shown here for you, and it's a very telltale sign of a bull trend when you see these shorter term moving averages trading above the longer term moving averages. And of course, whenever we see price come back down and retest some of these longer term moving averages, we anticipate buyers to come in and act as support here for the market and drive price higher. And if we just look back at the past couple of months, we can see the 21 has crossed below the 50, the 100, and the 200 EMA. We have seen the 50 EMA cross below the 100 and the 200 EMA, and finally we are waiting for that 100-day EMA to cross below the 200 EMA. This would be a 6-step bearish crossover here on the daily time frame with respect to the most common moving averages that are used in technical analysis. And most importantly, we are seeing this cluster of moving averages, this area where we've previously found support in the market, we are now seeing it act as resistance. We can see here just back in March of 2025, we had a nice little relief rally that took us back to a previous level of support, and ultimately sellers were still in control of the market. They set in a lower high and they pushed price even lower. So we are seeing not only bearish crossovers in terms of our EMAs, but we are also seeing key levels of price as well as the cluster of moving averages acting as resistance. So we no longer have the telltale signs that buyers are going to come in and set in higher lows and take control of the market every time they get a discount. As a matter of fact, we are seeing that sellers are going to step in and take control of the market anytime they get a slight premium. The last time we've seen a trend like this break down, it was in 2022 when inflation was ramping in the United States and when the Fed was raising interest rates. There was a lot of fear of an incoming recession at that time, and financial markets were not performing well. Of course, we saw a multi-month period of time where our shorter term daily moving averages were crossing below the longer term moving averages, and ultimately a range that had previously held up as support was acting as resistance, and sellers were taking control, setting in lower highs and pushing price further down. After the 6-step reversal here with our moving averages, we saw the trend play out for several months to follow, and ultimately we saw a top to bottom correction of about 27%, which is pretty significant for a traditional asset class such as stocks, especially when we're considering these major indices like the S&P 500. Going a little further in history, we actually saw 2 periods of time where the bearish reversals here on the EMAs did not result in any long-term bear market. Instead, the economy remained strong, employment remained relatively stable, prices remained relatively stable, and we saw a very quick V-shaped recovery. And so the important thing here is there's going to be a clear difference on how the market recovers from here, right? In these two instances, back here in 2018, as well as back here in 2020, we saw the market decline pretty sharply, and most of the downside, if not all of the downside, was already priced in by the time the 6-step process was complete here on the daily time frame. So we can see periods of time where the daily EMA crossovers are no big deal. They simply result in just a simple buying opportunity for long-term investors, right? The recessionary fears never come into reality. But what happens when the recessionary fears do come into reality? What happens when we don't get that V-shaped recovery? Well, guys, I would direct you back to the 2008-2009 bear market for the United States stock market. Guys, this was a very destructive period of time in the United States, not just for financial markets, but just for the macroeconomy in general. But you'll notice that this 6-step reversal of these shorter term moving averages crossing below the longer term moving averages took place within the first 3 months of this actual bear market. And the key thing that we saw, similar to 2022, is that the moving averages were never reclaimed, right? They acted as resistance every time price came back up into the cluster. Sellers took control, they were setting in lower high after lower high, and ultimately you saw a multi-year bear market take place to the tune of 50+% from top to bottom. An absolute nightmare in traditional markets, right? Looking back as well to the dot-com bubble in 2000 and 2001, the 6-step trend reversal here on the daily time frame only took about 3 months, but of course we were unable to get back above these longer term moving averages. We saw them act as resistance as opposed to support as they previously had. Sellers were taking control at these premium levels, setting in these lower highs and driving the market down further. And this was something that took a couple of years to recover from. So I just want to put it in context to where we are today. Obviously, we are not seeing these longer term moving averages on the daily time frame act as support. We are instead seeing them act as resistance. We have seen 5 bearish crossovers here on the daily time frame. The 6th and final crossover is this 100 moving average crossing below the 200. We have just entered the 3rd month since our actual top here for the equity market. So as far as time frame goes, we are well within the reasonable time frame for the trend breaking down. We are seeing those initial signs of resistance. We are seeing those lower highs come into play. So guys, I truly think that if the United States stock market, if the S&P 500 can't get back above this sort of 5,800 point level on the index, if we cannot make these daily EMAs support like they once had been, I do think that we are in for a much longer term correction. This might be a truly long-term multi-year bear market for stocks that we are about to enter in. I think that is going to be fully contingent on just how bad the United States economy gets here in the next year or two. That is to be foreseen, and we're going to have more content here on the channel discussing our thoughts there. Guys, it's going to be very important to watch these longer term moving averages, whether or not the bulls can take control, reclaim some of these previous levels of support that are now acting as resistance. Let me know in the comments if you think that we are entering into a bear market or a recession here in the United States, and what is your plan for that if that is the case. Guys, there's a lot to talk about. Subscribe to the channel, join the Discord in the description below. You'll get access to myself as well as 30+ trading analysts between stocks, crypto, and Forex, all there to better your trading game while you learn. It's a great opportunity, so definitely check it out. Subscribe so you don't miss the next video, and guys, until then, I will catch you in the Discord. Peace.